Hello, everybody, and welcome back to Tesla Center Point. For the past couple of months, the cost of Tesla stock has been all the rage. There are claims from examination wherever that the cost could get considerably higher than anticipated as long as Tesla proceeds with what it's doing. David Lee has guaranteed that Tesla could hit $10,000 by 2030. Yet how could he say this? How genuine are these cases? Stay blocked to figure out if David Lee is simply one more Tesla ball with a YouTube channel on money management. Those of you that realize him will realize that he is a Tesla lover, and as of late he shared a post saying that he would have the option to raise his underlying Tesla stock capital by multiple times its real worth. He says that he initially purchased Tesla stock expecting that the worth would increment by multiple times, that is from $3 billion to around $40 billion in market cap. Presently, he's as of late guaranteed that set of experiences, may be going to rehash the same thing, yet how could he say this? And what precisely is his registration as per Lee? The same way that individuals confounded the first iPhone is only exactly the same thing they're doing to Tesla to him. Tesla is embracing intricacy through development, and it's getting ready. The financial backer was enormously amazed when he figured out that Tesla stock had extended by multiple times in somewhat north of 8 years. This was undeniably finished by essentially holding the normal stock. This has caused him to accept that the stock could try and go higher, perhaps multiple times more over the course of the following 8 years. Assuming you give close consideration to Tesla stock news, you will realize that Tesla as of late detailed amazing figures for their latest quarter. Given the macroeconomic environment being what it is, Tesla had a fruitful quarter. It beat examination assumptions by $3.32 billion in income at $18.7 billion. This was up long-term over year. Well, most anticipated that Musk should discuss what's next for Twitter. He rather put all his emphasis on Tesla, totally outperformed the assumptions for investigation including enterprises, and they actually own no stock, so it doesn't exactly make any difference in the event that the organization's profit disheartens or stuns these examinations. Financial backer promotion examination assumptions for youthful high development organizations are generally in conflict, and anyway, Tesla stock has truly been affirmed to outperform investigation assumptions for some time now, and this has become very evident as a matter of fact. On the off chance that you take, for instance, Tesla's most memorable quarter profit, the figures have gone extraordinarily past what the investigation had anticipated at this point, and they will have met the financial backers' assumptions. Most monetary specialists were stunned on the grounds that they zeroed in on the investigation gauge and how much Tesla had pulsated them, as opposed to zeroing in on financial backer assumptions and whether Tesla had surpassed them anyway. As per Lee, Tesla didn't truly have the underlying energy expected to continue pushing and hitting new all-time highs. It even simply met or scarcely and imperceptibly surpassed market assumptions after the profit call and declaration. Shares rose by just 6%. This isn't exactly a shock since the greater part of the reliable financial backers as of late have had elevated standards for Tesla and its administration, particularly for good conveyance figures, indicating that the costs of the stock are not entirely set in stone by income creation. One of the variables behind Tesla's most memorable quarter execution was limitations. It was likewise one reason that the stock neglected to arrive at an untouched high because of the critical COVID-19 regulation endeavors and a spike in cases in the nation. Tesla's Gigafactory in Shanghai had to close down on March 28 as per Credit Suisse. The sitting started toward the end of the primary quarter and was for the most part expected to influence the organization's second quarter execution. Fundamentally, this was on the grounds that the Shanghai processing plant is the biggest in yield anyway. Financial backers remain moderately hopeful since Tesla's administration appears to have all that taken care of, even with Shanghai's Gigafactory being totally closed down for quite some time, yet it created over a portion of the organization's vehicles last year. It was predominantly closed down due to China's zero-COVID crackdown as per Tesla. The flow quarter's conveyances ought to be level when contrasted with the initial 3 months of the year. Throughout the year, it's normal that Tesla will supply around 1.47 million units as per Lee to keep up with its bullish ascent each quarter. Then it ought to show income development. Tesla ought to convey a larger number of autos than financial backers expect, just as income ought to likewise surpass assumptions. This will ultimately drive the stock cost higher since Tesla has said that it needs to increase creation by 5% by the following year. It's a good idea to anticipate that the stock cost should go up. David Lee isn't the one in particular who is, by all accounts, energetic about Tesla's development by 2030. Warm Capital likewise had a ton to say regarding Tesla in its Q1 2022 financial backer letter. They guessed that Tesla's portions will give financial backers approximately multiple times the return by 2030, while possibly not essentially more. This is the company's biggest holding and has become progressively hopeful in the past couple of months. The firm claims that as an impression of their expanded certainty, they've figured out how to build their Tesla holding in Q1. Their expectation is that Tesla will beat the S&P 500 over the long haul. The firm expressed that Tesla actually has no less than 10 years of improvement ahead of it and is simply reaching the point where it will begin to develop rapidly. This is like the way in which Amazon emerged from the Nasdaq bubble and the monetary emergency. There were likewise a few other encroaching projections for the electric vehicle brand's future from another Tesla creator, Gary Dark, who contended that Tesla's market capitalization ought to be around $4 trillion, but as of now it's valued at $756 billion as per Dark. By 2030, worldwide electric vehicle entrants will have arrived at around 6%. By then, Tesla will have a 20% electric vehicle piece of the pie, and notwithstanding this, Dark likewise expressed that before the decade's over, Tesla would as of now be conveying around 10 million vehicles each year with overall light vehicle sharing paces of around 85 million units. Anyway, things could deteriorate before they get better. As per some examination, Tesla's stock cost went from a high of 1,152 right down to a low of 902 in April. This was obviously joined by many promising and less promising times by and large around the critical 1,000 level. Yet where did this choppiness come from? Similarly, as Apple and Microsoft had exhibited financial backer opinion, is gradually moving away from cutting-edge stocks. Then again, the continuous canvas-related closures in China are reason to worry. With the flow circumstance in Shanghai, it's challenging to perceive how Tesla will meet its conveyance focuses. On Tuesday, Tesla bull Dan Ives of Mary Bramble featured a worry in a note to clients. "I've guaranteed that the vital worry for later is the seriousness of China's assembling inconveniences and what this will mean for conveyance in the second quarter of the remainder of the year. One investigation places Musk in a terrible spot since there are such countless questions that are encompassing the second quarter China creation, and they will look out for direction until the end of the year. Thus, there's been a conspicuous shade on the stock throughout recent months. Cathie Woods, a genius stock picker and longtime Tesla bull, appears to be very off the wall by these worries. As per Curve Venture, her firm's Tesla offers could be valued at $4,600 by 2026. In the relatively recent past, the organization anticipated an offer cost of $3,000 by 2025. In a past report, the bull situation conjectures a cost of around $5,800 by 2026, while the bears estimate a cost of around $2,900, which is even multiple times the ongoing cost of $1,500. Indeed, even in the most dire outcome imaginable, the circular segment actually anticipates that Tesla's worth should be multiple times that by 2026. In a note to financial backers, the venture organization said that, despite the fact that they aligned with their 2026 evaluations, they actually accept that their Tesla model is fancifully moderate and have additionally said that they expect Tesla stock to exchange like an experienced company as opposed to a high development one out of 2026. As per Tasha Kinney's one of the Curve examination, the expectation that Tesla will have more capital that is productive is essential in light of this. Tesla's capital speculation per steady unit of limit has dropped from 84,000 in 2017 to around 7,700 this year. Dave Lee has said that he is in it for the long run with regards to his stock, and he keeps on accepting that Tesla will see fantastic growth by 2030. His confidence likewise appears to be legitimate, and with all that Tesla has made arrangements for the future, we can say that it could actually be so. What are your perspectives on Tesla's stock price? Let us know on the comments segment down underneath, and keeping in mind that you're here, feel free to tap on one of these two recordings on your screen. See you there.